Hello and welcome to this July 2nd, 2010 video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Netflix, ticker symbol NFLX. It's a little more than a $5 billion market cap company, and it is in the consumer discretionary space. Before I get into Netflix, I think probably the biggest part of the puzzle here on Netflix, whether or not it's going to succeed or not, really depends on the overall market. We did have a nice reversal in the market on Thursday, finishing still down for the day, but well off the lows. So we're hopeful that maybe that could spur a little bit of buying in the very near term, and if so, we think Netflix could benefit from that. We like the pattern that's set up. You can see the stock has been in a very, very nice uptrend for the last several months. Just recently topping about a week and a half ago in mid to late June. We came back down here over the last 7 or 8 trading days. You can see all the way back down. We'd held for around the 20-day for a few days and then finally broke below that and came down and tested the 50-day moving average. This test of the 50-day moving average is the first one that we've seen now in about 5 or 6 months. So very important technically that this hold. You can see intraday on Thursday we had fallen all the way down to a 103 and change, came back up and closed at 109.66, which was about $1 above the 50-day moving average, which is at 108.52, and that continues to climb. The reason we like Netflix, number one, the stock was at about 127, 128 just 2 weeks ago, now back at 109, again hitting that 103 low on Thursday. This definitely sets up a much better pattern from a reward to risk standpoint. We did have a hammer print off of this downtrend, so that's a reversing candle which helps to support a possible move to the upside. That hammer also occurred right on the 50-day moving average, so it did happen at a key support level where we would also expect a bounce. So that's really the main reason why we're looking for near-term move to the upside. Volume trends have been very solid. If you take a look over the last 3 or 4 months, as we've made most of the gains, as the stock rose from $75 up over $125, you can see that most of the up days were accompanied by very strong volume, while the down days held support and also were on lesser volume. The RSI, normally in an uptrend on an uptrending stock, when you get down to about the 40 to 50 area, that's where you would expect the RSI to hold. You can see back in May we had a couple of them that came down to, a couple of the lows on the RSI came down to about 50 before bouncing. We saw the stock bounce, and in this case on Thursday the RSI actually moved back to about 45 before turning back to the upside. Looking at stochastics, this is the first time that Netflix has seen stochastics below 20 in the last 5 or 6 months. The stochastics reading is actually down at 10, almost threatening to go into single-digit territory. So the stock looks like it's primed for a bounce, and given the technical, some of the technical characteristics here, especially the hammer at the 50-day moving average, and also the MACD, which has been well above the center line for many, many months, finally coming back down, and perhaps we're about to see a test of the center line on the MACD. So all of this together just seems like it is a good candidate for a bounce, especially if the market can bounce overall. But I would keep tight stops in play, especially if volume picks up to the downside, because the market itself is definitely in a position here where we could see some lower prices and could be significantly lower if the market begins to panic to the downside. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.